Welcome, Curious Minds. Today, we're embarking on a deep dive into some really fascinating material. The recent Q2 2025 earnings interview and shareholder letter from Netflix. Our mission here is to go beyond the headlines, really extract the most important nuggets of knowledge, the insights from this, well, mountain of information. You'll get a shortcut to being well-informed, hopefully some surprising facts, and just enough humor to keep you hooked.
Yeah, and what's fascinating here is how these documents, they don't just give us numbers, right? They paint this comprehensive picture of Netflix's strategy. Everything from content to tech to, future growth. What really stands out, I think, is how they're seemingly diverse initiatives. They all seem to fit together. It's part of a larger cohesive plan. We'll try and connect the dots on how, live sports and AI-powered VFX tie into their bigger ambition.
So what does this all mean for the future entertainment? And maybe more specifically, what's really driving the engine at Netflix right now?
Okay, let's unpack this. Let's start with the financials, but let's try to reveal the real story behind the numbers. So Netflix reported Q2 revenue up a pretty solid 16% year over year, hit $11.08 billion, operating margin very impressive at 34%, and diluted earnings per share soared 47% to $7.19. They actually beat their own guidance for revenue and operating income.
Right. And while those numbers are certainly strong, it's really crucial to understand why they beat guidance. The primary reason actually was favorable foreign exchange impacts. The U.S. dollar weakened, that combined with some strategic timing of their expenses. So yeah, the growth is there, but currency definitely gave it a bit of a boost.
That explains some of the immediate jump, sure, but how much of this performance is genuine underlying strength? Because when you look at their full year forecast, they've actually increased their revenue guidance. Now it's between $44.8 billion and $45.2 billion. Yeah, that's about $1 billion increase at the midpoint. Pretty significant.
And their operating margin target for 2025 is now 30%, up from 29%. Free cash flow is also up, forecasted at $8 to $8.5 billion.
And the good news is, despite that FX boost you mentioned, Netflix is seeing genuine strength in its core business. This isn't just, a currency fluke. They're seeing healthy member growth. Apparently, it picked up nicely at the end of Q2, even beat their own expectations.
Right.
Plus, their ad sales have this incredible momentum. They're on pace to roughly double revenue this year. That's actually ahead of what they initially thought.
Wow.
And critically, their operating expenses are basically unchanged forecast to forecast. So that higher revenue, it's flowing straight through to profit margins.
It is interesting, though, that their Q3 forecast for operating margin is 31.5%, but the full year target is 30%. What's going on there? Are expenses ramping up later?
Yeah, that's mostly a timing thing. Content expenses are expected to ramp up pretty significantly in Q3 and Q4. It's because of a heavier slate, new and returning titles, more live events, especially a bigger film slate in Q4.
Right, makes sense.
Also, you've got increased marketing support for that bigger slate, and they're still aggressively building out their ad sales infrastructure. So yeah, higher expenses in the second half.
But even with that ramp up, they still expect operating margins to be up year over year each quarter, right?
Exactly. So it sounds like they're managing that investment pretty effectively.
And what about consumer sentiment? Are people feeling squeezed?
Well, all the direct indicators they see from the business, like retention rates, plan mix, plan take rate, they all remain stable and healthy. Retention is apparently industry leading. And what's really compelling here is Netflix's resilience. Entertainment, and Netflix specifically, has historically been, quite robust, even in tougher economic times. They believe they offer, and I quote, incredible entertainment value, especially with plans starting at, $7.99 in the US? It's a relatively low-cost escape for people.
Yeah, true. Okay, finally on the financials, let's touch on M&A, mergers and acquisitions. Netflix acknowledges consolidation in legacy media is likely, but they famously see themselves as builders rather than buyers. They're not interested in owning old TV networks.
Right.
How does this builder philosophy shape their strategy compared to, say, some competitors?
It means they're focused predominantly on organic growth, investing aggressively responsibly in their own content, their own tech, their ad infrastructure, and they're returning excess cash to shareholders through share buybacks rather than using it for these big, splashy acquisitions.
Okay.
It contrasts sharply with a lot of legacy players who are, consolidating just to gain scale. Netflix aims for scale and advantage through internal innovation, building, not buying.
That builder mentality definitely sets them apart. Okay, now, a massive piece of this puzzle, and clearly a major revenue driver now, is their advertising business. seems to be accelerating rapidly. How are they doubling down here? What makes it such a strong performer for them right now?
Well, their U.S. upfront negotiations are nearly done. Most deals closed with the major agencies, and the results have been generally in line with, or maybe even slightly better than, their targets, which is consistent with that goal you mentioned, roughly doubling the ads business this year.
So advertisers are buying in? What's drawing them in?
Advertisers are clearly drawn to their growing scale, for one. Also, their audience is seen as highly attentive and engaged, maybe more so than peers, they claim. And then there's the successful rollout of their own ad tech stack, which we should talk about. And of course, the content slate, which now includes more live events.
Yeah, you mentioned their proprietary ad tech stack. What makes that such a crucial development? Why is it so powerful for them right now?
So the rollout of their own Netflix Ads Suite, their first-party ad tech platform, it's now complete across all ad markets globally.
Wow, globally.
Yeah, and apparently the rollout was smooth, performance metrics look good, early results are in line with expectations. But the most immediate benefit, the thing advertisers are citing, is the ease of buying on Netflix. Especially with more programmatic buying, that's the automated real-time stuff, makes it super efficient for agencies.
Okay, so it makes it easier to buy ads, but it's not just about ease, right? What other innovations are we likely to see now that they have this proprietary tech?
Exactly. This stack isn't just about ease. It lets them execute much faster on a pretty significant roadmap of features. Things like improved targeting, better measurement, leveraging advertiser and third-party data, and ultimately just enhancing the ad experience for members through better personalization.
Makes sense.
And get this is fascinating. Netflix plans to introduce interactivity in their ads in the second half of 2025.
Interactivity, like clickable ads.
We don't know the exact form yet, but yeah, something that allows more engagement. It lets them have this steady release cycle of new features for both advertisers and members. Plus, they'll be rolling out additional demand sources like Yahoo.
Yeah.
It signals a really aggressive, innovative approach to ads.
Definitely something to watch.
Yeah.
Okay, ultimately, all these financial plays, the ad tech, it all serves one core purpose: getting compelling content in front of us viewers. So let's dive into what Netflix is actually putting on screen and how they're keeping us engaged. Their total view hours grew slightly, about 1% year over year in the first half, even with a slate weighted towards the back half.
Yeah, and they're primarily focused on what they call owner-household engagement. It cleverly removes the borrower effect from, page sharing.
Oh,
And that metric has remained relatively steady over the past 2.5 years, which is pretty interesting given the increased competition. They're optimistic, though. They expect engagement growth to be better in the second half, driven by that strong upcoming content slate we talked about.
it seems like Netflix has a bit of a unique philosophy around hits. How do they view single blockbusters versus like their broader content strategy?
Well, they really emphasize that no single title, not even a massive hit like Squid Game, drives more than about 1% of total viewing.
Only 1%. That's surprising.
Yeah. So their strategy isn't really hit-driven in the sense of relying on these isolated blockbusters. It's more about a steady drumbeat of shows, films, games that members consistently love. This quality at scale, as they call it, is kind of exemplified by their 44 individual shows nominated for Emmys this year. Shows real depth across the catalog.
That's quite a drumbeat. Can you give us some highlights from Q2 and what can we expect in the coming months? Sounds like a lot is coming.
Oh, yeah. Q2 successes included Squid Game Season 3, 122 million views, their sixth biggest series season ever.
Wow.
Other hits: Sirens, Ginny and Georgia Season 3, films like Tyler Perry's Straw and Exterritorial. That's their fourth most popular non-English language film ever. In fact, non-English content is huge for them. Over a third of all viewing in the first half of 2025. And yeah, get ready for a massive second half, returning hits like Wednesday Season 2, The Stranger Things finale, finally.
Can't wait for that one.
Adam Sandler's Happy Gilmore 2, new films from Catherine Bigelow, Guillermo del Toro, and 2026 looks just as strong. The Rip with Ben Affleck and Matt Damon, Enola Holmes 3, Greta Gerwig's Narnia, new seasons of Bridgerton, Beef,
Okay, slow down. That's a lot.
and global hits too. Lupin from France, 100 Years of Solitude from Colombia. It's a lot.
One title that really jumped out at me from their report was K-pop Demon Hunters. It sounded like an absolute phenomenon. What's the story there?
Right. K-pop Demon Hunters pulled in 80 million views, one of their biggest animated films ever. It's truly becoming a sensation. Apparently, its fictional bands are breaking real K-pop records set by, like, BTS and Blackpink.
Seriously, Fictional bands.
Yeah, the soundtrack is the highest charting of 2025 on the Billboard 200. The song Golden hit #1 on the Billboard Global Charts. Biggest song in the world from an animated movie's fictional band.
That's incredible. What does that tell us about their strategy?
It really shows the power of original animation, first off, and how they can pierce the culture with unique, locally resonant content that then just breaks out globally. It's pretty amazing.
And that success really speaks to their local for local content strategy you mentioned. How does that translate into where they're putting their money?
Well, their strategy is deeply rooted in local for local, collaborating with local talent worldwide, creating stories that genuinely connect with regional audiences. That led to hits like The Gardener, a Spanish series, and it's why they've committed over €1 billion to invest in Spain between 2025 and 2028.
€1 billion just for Spain.
Yeah, but despite that global focus, their most significant investment still remains in the U.S. They estimate contributing like $125 billion to the U.S. economy from 2020 to 2024. And they're expanding production facilities too. Albuquerque, Fort Monmouth, and New Jersey, that's another $1 billion investment right there.
So even with all these new services popping up, free ones, paid ones, how is Netflix maintaining its viewing share? Nielsen data sometimes shows stagnation, right? And where do they see the biggest growth opportunities against all this competition?
Yeah, while Nielsen data might show some flattening in domestic share, Netflix points out they've basically maintained their share amidst this explosion of streaming services, both free and paid. And that's even with the impact of cracking down on password sharing, the paid sharing initiative.
Right.
Their long-term goal is simple: keep growing as the other 50% of TV viewing eventually migrates from linear TV to streaming. The market for entertainment is just vast, isn't it? Competition from linear, games, social media, and free services are strong competitors too.
And for you, the viewer, what does this aggressive competition really mean? Netflix's focus, they say, is on winning most profitable moments. There's apparently about 80% of total TV viewing share that neither Netflix nor YouTube currently wins. That represents this huge opportunity, and it means aggressive competition. More choice for you, potentially more innovation as they all fight for your eyeballs. Okay, beyond traditional streaming, Netflix is making these bold moves into live events and gaming. Their live strategy isn't just about sports, is it? It's broader.
Yeah, exactly. Live content is a subcomponent of a broader live strategy. It goes beyond just sports. The focus is on ownable, big breakthrough events, things audiences love, and crucially, things that make economic sense for Netflix. These events, even if they're a small part of total content spend or viewing hours, apparently have an outsized positive impact on conversation, acquisition, retention, buzz factor, basically.
So what kind of events are we talking about?
Well, current successes include the Canelo Crawford fight coming up in September, the SAG Awards they hosted, weekly WWE matches,
All right, WWE.
and the upcoming NFL Christmas Day doubleheader. Big games. Dallas versus Washington, Detroit versus Minnesota.
NFL on Netflix. Still feels a bit wild.
It is. And today, these live events are mostly U.S.-based, but they plan to keep investing and growing their live capabilities for global events in the years ahead.
Building out those live capabilities, though, that sounds incredibly complex. What have been the biggest challenges? Are they building it all themselves or partnering up?
That's an excellent question. Netflix actually compares it to their early days in original scripted programming.
Oh, interesting comparison.
Yeah, where they initially relied heavily on partners and then later brought some production in-house as they learned. They see it as a scaling tool, not necessarily backfilling a lack of ability from the start. They openly partner with experts, like CBS for the NFL games. They admit they don't expect to be brilliant at something totally new right away. They learn by doing.
Okay, learn by doing.
And they have made significant progress. They recently delivered their first concurrent pair of live events, Taylor versus Serrano globally, and WWE SmackDown outside the U.S., apparently at scale and with high quality. So they're getting there.
So learning by doing seems to be a core philosophy there. How does that apply to their gaming ambitions? They're evolving there too. What's the near-term monetization strategy?
Well, Netflix views near-term gaming monetization pretty much like other new content categories. The idea is delivering more value drives user acquisition, retention, and ultimately willingness to pay more for Netflix overall.
So games make the main subscription stickier.
Basically, yeah. They've seen positive proof points, they say, though still small, with members actually playing games on the service. Their investment in gaming is currently small compared to, their overall content spend, but they plan to ramp it up as those positive effects grow.
What kind of games are we seeing?
Progress includes licensed hits like Grand Theft Auto, and also developed games tied to their IP, like Squid Game, Unleashed, which got significant updates for Season 3, and Thronglets, which ties into Black Mirror Season 7. They're open to evolving the monetization model down the line, maybe separate fees or in-game purchases, but they acknowledge they need much more scale first. They see the gaming market as just, huge.
Makes sense to build the audience first.
Mm.
Okay, beyond just content and new formats like live and games, Netflix is clearly pushing boundaries with innovation itself. They recently launched a redesigned TV homepage. Simpler, more intuitive, they say. What prompted that overhaul? What's the goal?
Right. The old experience, they admit, was designed for the Netflix of 10 years ago.
Yeah, felt a bit dated sometimes.
Exactly. The new one aims to address the need for different discovery experiences. For example, helping members tune in at specific times for live events, which the old grid wasn't great for. It also leverages newer tech like real-time recommendations, so the Netflix you see on a Tuesday night might actually look different from what you see on a Sunday afternoon. More dynamic.
Oh, interesting. Real-time personalization.
Yeah. And early results are encouraging, apparently outperforming their pre-launch testing. It gives them a better platform to build on as they add more types of entertainment.
And speaking of innovation, probably the most futuristic part, generative AI. Netflix seems really convinced Gen AI is this incredible opportunity, not just to make things cheaper, but to help creators make films and series better. What specific applications are they actually seeing in production? Is this real yet?
Oh, it's definitely real. They see benefits in production through AI-powered creator tools, things like pre-visualization, shot planning, visual effects. For instance, de-aging actors. That used to be limited to huge budgets, right? Now it's becoming more accessible thanks to AI.
Okay, de-aging, sure.
But here's a real aha moment they shared. The show Ella Tonada from Argentina. It used virtual production and AI-powered VFX for a scene with a building collapsing. That sequence, get this, was completed 10 times faster than traditional methods, and at a cost that just wouldn't have been feasible otherwise for that production.
10 times faster, wow.
And significantly, this marks the very first Gen AI final footage to appear on screen in a Netflix original series or film. So it's happening now.
That's a staggering increase in efficiency and a huge reduction in cost potential. What's the broader impact of this AI on the creative process itself, do you think?
Well, the broader impact isn't just speed or cost, right? It's
Yeah.
really democratizing these complex visual effects. It means creators, maybe even smaller independent ones eventually, can bring these really cinematic visions to life. Things that were once reserved only for Hollywood blockbusters. It really expands the canvas of storytelling, allows creators to explore ideas that were just out of reach before because of budget or tech limits.
So, empowering creators beyond production. How else is Netflix looking to leverage Gen AI?
Well, they see tons of opportunity to use generative AI to improve the member experience too, enhancing personalization, recommendations. They're even piloting a conversational experience, allowing members to use natural language search. Like you could literally say, I want to watch an 80s dark psychological thriller.
Okay, that'd be cool.
They see it as a force multiplier for their content investment, makes it easier to find the right thing among their vast library, and for advertising too. Gen AI can lower the barrier for creating compelling ads that fit within the creative universe of their shows, enabling more of those kinds of brand placements. It's about efficiency and impact, really, across the board.
So, wow. We've journeyed through Netflix's Q2 2025. We've unpacked everything from their surprisingly strong financials, the strategic growth in ads, the incredible breadth of content, those bold steps into live and gaming, and now this groundbreaking use of AI.
Yeah, if you connect it all, it's clear Netflix is strategically building this highly integrated entertainment ecosystem, isn't it? They're not just a streaming service anymore. They're really aiming to be the go-to destination for, well, all forms of screen-based entertainment, and leveraging technology constantly to enhance both the creation and the consumption. They're moving beyond simple aggregation, trying to shape how we experience stories.
So what really stands out to you, listening to all this from our deep dive, for me, perhaps it's the idea that in this world of just endless content, the future belongs to those who can master not only storytelling, but also the technology, the tech, to deliver it precisely, personally, turning every view into a moment of, well, pure engagement. We hope this deep dive has given you plenty to mull over, maybe spark some new questions for your own exploration. Until next time, keep digging for those insights.